Great question. So what we're looking for in the quarter with Facebook is just a continued recognition that they have this superior growth ramp ahead of them relative to a number of other stocks that we see in the large cap space. And I think with regards to what's going to be focused on, always the idea of reinvestment, how much money are they putting back in the business and what does that do to their margins is something that Wall Street pays pretty close attention to. And obviously that's a number that we'll look to. But directing at your question about regulatory, it seems like Wall Street has put that behind them for now. Investors that were concerned a couple of months ago have looked past that. Any outlook there from Zuckerberg and Sheryl Sandberg are going to be important, and that's something that I think will move the stock.
Chris, what about valuations? How high are they at this point, and who looks like the better value with any potential upside going into earnings?
Well, I think if you look just broadly speaking at the FANG stocks in general, valuations are a little bit elevated there. Could they go higher though? Yeah, I think they could. I'm a couple decades ago, I was a tech analyst back when valuation multiples were, measured in 3 digits and sometimes 4. So, if you look at the underlying earnings growth of some of these companies, the PEG ratios don't look all that onerous. Now, having said that, Riverfront actually prefers the more value end of tech, where, the types of companies that are generating really solid cash flow and dividend growth that trade at actually sub-market multiples. But right now, it's possible that the FANG stocks could go a lot higher here.
Chris, it's Evan Newmark. I don't know if you invest in or you cover Amazon, but can you, in any kind of straight numerical way, justify the valuations of Amazon on anything other than kind of a paradigm shift? You got to believe in the future, the cloud, all that kind of stuff. I mean, can you value that in a traditional way and get yourself comfortable with the stock? Well,
just to be clear, I'm a global macro analyst. I look at 40 different countries from a 30,000-foot view. But I will tell you, when I look at a stock with the kind of multiple that stock has relative to the type of margins that it's been able to generate, I think it's a bit of a head scratcher too. Why people pay as high of a premium for that, and it has to be based on the market's outlook for the long-term future of that company. That at some point they can set up some sort of competitive moat, maybe it's first mover advantage, which that company clearly has, to try to grind out, better operating margins in the future than it has today. But in full disclosure, I've been wrong on that company for a decade and a half because I've never understood the margin profile.
Jason, more broadly, I mean, some of these stocks at the very top of the NASDAQ, which of course now are at the top of the S&P 500, they really do benefit from this idea that on a long-term basis, everyone has clear visibility. These platforms are almost impenetrable. They're going to keep growing at very fast rates for a long period of time. What we've seen so far is Netflix obviously still has that long-term story intact, but really stumbled when it didn't deliver numbers. And then Microsoft today, which I do put in that category now, had an unassailably good quarter, and the stock was up 1.3% and closed $2 off its high. So I guess I'm asking, tactically speaking, are people a little too confident in the growth outlook to stomach anything less than a perfect number next week?
Yeah, I think that's a fair point. I mean, expectations are fairly high. I mean, look at Amazon, for example. It's up 55% year to date. So, I mean, you have to infer from that people have high expectations going into the quarter. Alphabet and Facebook, same kind of thing, both of them beating the market. But, again, I think putting some long-term perspective into this matters. And obviously, these are companies that they themselves don't manage quarter to quarter. So as investors, we try not to analyze our investments on that same type of basis. We're trying to look more longer term. And I think what we're really looking for from these 3 companies next week is just an understanding that these are long-term games and that they have to continue to put the capital back in their business to grow at the rates we've seen over the last few years. And I think that over the fullness of time, that will be justified with the valuations we're seeing.
Chris, macro question. Do all of them face pressure when it comes to politics, regulatory scrutiny, calls to be, broken up or whatever it is going into the midterm elections? We've gotten a taste of it with Facebook. We saw it with Google and the EU this week. How much of a risk is it for these guys?
I think some of that risk does exist. I mean, if you just look at the Qualcomm NXP situation, right? There's an example of 2 companies that have become pawns, if you will, in a geopolitical game that's a couple levels above them. So I think that risk does exist. But if you go back in history, that companies like Google and Microsoft have been dealing with headline risk as it's related to political headwinds for a long time, and over time their multiples have been able to power through that. So I try not to get too bent out of shape about the geopolitical risk here for these types of companies. But I do think from a headline risk perspective, I think it does exist.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.